Pashupati, do you track Walcott?
Not really, but I do remember it being in 4 digits not so long ago. So,
Do you think it could go back to 4 digits once again? It's a beaten down stock. It's a good business. They managed to survive the 2008 crisis.
Well, they did. I mean, they did some good financial engineering, but I think they still have an exposure in dollar, which has obviously gone for a toss in the last 60 days. So, I don't think it's going to achieve 3 digits, but certainly it looks like it's on an upward roll. As you said, smart money has come into it last week and is holding it tight, it looks like.
You're a long-term investor in HUL. Now, HUL is trading at 40x based on FY14 estimates. This is some kind of an historic high for HUL, both in terms of price and in terms of valuations. So, at the current level, are you somewhere tempted to book out of HUL?
Well, the thing is, if you are in the stock market and you book out of HUL, where do you go? And, what we're seeing is any incremental money that's coming in is still coming in FMCG. Cash. It's coming in FMCG, it's coming in IT. It's not yet coming into banks, it's not yet coming into infrastructure, which is where the country needs the money. So until that happens, and there are people who are basically wanting to have some position in India, they're going to continue to buy into these stocks.
So you've been owning HUL for what, 25 years now?
Well, a long time.
A long time. And you have no plans to sell that?
Well, I did tender some.
Okay.
And I'm not being greedy. I thought that 600 was a good price when the stock was 400 before it was announced.
Okay.
What about IT then, Pashupati? I mean, is there still opportunity to buy into the stock and make money?
Well, again, are you telling me that the dollar is stopping at 61, almost 62? It looks a lot more attractive. Ideally, it means that the earnings should go up by 10% without even trying. So, the numbers are looking better. We've seen, numbers of companies like Tech Mahindra and Infosys showing good numbers. And I think that, the guidance also will probably come in. This is a cycle. And I think that tech has been out of favor globally for a while. And now the cycle is coming back again where people are looking at upgrading their systems. And therefore, we are going to be there. But I do have one caveat, and that is the immigration bill in the US, which is going to put some kind of a dampener on it. So it's a ride for a while, but it's not a free ride forever.
Banks have been a big eyesore, Pashupati, when it comes to this earnings season. How long before we see any meaningful recovery, or is it the right time now to start bottom fishing, or would you say still stay away from banks for the next 2 to 3 quarters?
Well, I think that, first of all, banks are a very large part of our index, so it's very difficult to ignore as a sector. And, what has happened is the way our market has behaved, fresh money, new money is coming into big stocks and index stocks. So I think that they are going to buy some banks. Now the question is, the debate is on between Indian public sector banks and private banks, and that debate will go on forever. SBI did not have good results yesterday, and everybody has basically downgraded it by about a 10% for the targets. And now you're looking at, for example, what do you go into next? So then people are saying, is it ICICI, is it HDFC, or is it a private public sector bank like Punjab National? So, they want to be in the sector, but they want to be lighter. And I think that's what's actually happened.
Pashupati, are we going through a cycle of PE compression in private banks, and are we going through a cycle of PE expansion in IT?
Well, the PE compression, obviously, I think the E is getting compressed because I think they're going to have more loan losses rather than a PE compression. And in the case of IT, the earnings probably will just go up on nominal basis. One of the things that I've actually looked at is that, you've got an inflation rate which is in double digits. And just if you did nothing in the market, if nothing happened in the country, the market should go up by at least the inflation number. I mean, inflation number plus, otherwise why would you be you're not getting paid to be in the stock market. And therefore, when you think about that, how much lower can the market go? But on the other hand, with the disinterest, with the flows coming the wrong way, and we've had a lot of disinvestment, and we've also got a lot of offer for sales and a lot of new product coming, that's sucking up all the new money. So I think that's the real concern. Our market is basically based on flows.
Pharma as well, Pashupati, is getting fairly divergent. I mean, you have beaten names like Ranbaxy, which are now showing decent earnings, stocks running up. Lupin, on the other hand, has somewhat disappointed this quarter. And you've got Cipla and Sun Pharma, which again have excelled. So how do you sort of draw the line between the pharma majors now?
Again, I think the winners in the pharma sector are going to be the ones that actually have their thoughts in order, have got their patents right, and are doing things the correct way. You know, the old way of maybe 10 years ago where you said, "Jo bhi hoga, chalega," that's not going to happen anymore. And I think that, you know, we are signed into TRIPS. We are, you know, have to be cognizant of what the government has signed regarding patents and patent protection. And we're seeing it. You know, Indian companies are losing cases in the US for generic drugs. And I think that, you know, they're all rethinking their businesses. However, India still is an attractive destination for drug discovery. The Indian market for drugs is growing, and the Indian population is actually being able to pay more for drugs. And as more people move into the middle class, they will actually start buying and consuming more tablets. So I think those are all positives for the sector.
So, Pashupati, what is the right approach in this kind of a polarized market? Should one stay with the trend, which is pharma, FMCG and select IT stocks, or now it's time to be contrarian and it's time to identify some, you know, cheap and beaten down value stocks?
I think it's a combination. It just depends on how strong your stomach is. It is time to perhaps bottom fish, but again, you know, it's very, very difficult when you're getting, like, for example, if you look at banking, there seems to be continuous bad news still coming. And, you know, you will say, okay, I'll bottom fish and I'll buy this bank, and then suddenly there's some news on it. And, you know, those are not things that we can actually, you know, control. But obviously, it's better to buy it cheaper. I mean, just to take an example, okay, you take some company like Apollo Tyres. They announced a deal. It looks like the deal is going through. The stock came down from 90 rupees to 60 rupees, went up to 70. It's back at 60 with the rupee 10% cheaper. So if you looked at the company and the tire business, you know, you would say, okay, and it's basically a global acquisition. You're saying, okay, you know, it's now 10% cheaper than it was. So if I was making the play, then maybe that's the one to bottom fish.
Are you buying Apollo Tyres then?
No, I'm looking at it. I mean, you know, I certainly think that it's worth a punt, because again, in US terms, it's a dollar stock. It's less than $1. So, you know, you can get a lot of people sort of excited about it just because saying, okay, you know, take a punt at it. And it's a US company, so it's visible to them.
What about metals? What explains the bounce that we've seen in the metals pack of late?
Well, you know, there's been some good rumblings in China. You know, that the figures that are coming out of China, again, are beginning to look strong. And I think they're beginning to start lifting raw materials in the market. And that's actually given some sort of relief to the metals producers. And let's see how real it is. I mean, they're just making noises, and that PMI number of China is also has gone plus, whereas ours has gone minus. So, you know, that's one of the things that we are looking at.
Wockhardt is still locked up, but the DLF surely seems to be bouncing back. DLF, in fact, is up about 6%. Last week, we saw a similar move in Ranbaxy, where expectations were low, markets were expecting nothing. A little bit of a number surprise, and the stock went through the roof. And the DLF also, I guess, ditto is happening. GVK Power is also up 8%, IDFC is up 1%, Orchid Chemicals is up by about 11%, RCOM is also looking stable. So there is some price action in the beaten end of the market, or I would say in the rusty end of the market. Pashupati, what is the future for companies like Suzlon, JP Associate, GMR, GVK? If you buy into these stocks now, you're pretty much buying the entire business at option value.
That's right. So it's the same thing in Apollo Tyres. You're buying the acquisition on option value. You're not really buying it as a stock price. So it is, you know, people are going to take punts. There are people who are saying, okay, we'll put some of our money into those type of instruments and those type of shares. And that's what you're seeing. However, it actually hasn't been a good strategy so far, as you've seen, and there's been a lot of pain on the way down.
Right, Pashupati, really appreciate your time.